Based on the historical data and forecast, Bitcoin shows a fluctuating trend with periods of both upward and downward momentum. The RSI consistently hovers around the mid-range, suggesting a neutral market sentiment. The Bollinger Bands have been widening recently, indicating increased volatility. Given the recent downward forecast, I recommend a short-term contrarian strategy. We'll look for opportunities to buy the dips when the price approaches the support level of $78,600. Specifically, enter a long position at $82,200. Place a stop-loss order at $78,600 to protect against a significant downward move. Set a target price of $87,400, aiming to capitalize on potential upward corrections. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI drops below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it strengthens the buy signal. However, considering the forecast, I would implement a conservative approach. If the forecast price continues to decline and reaches $80,100, consider initiating a short position with an entry price of $82,800, a stop loss at $84,300, and a target of $80,100. This strategy combines technical indicators with market trends to maximize potential returns while managing risk. Based on the historical data and forecast, Bitcoin Cash is exhibiting a downtrend, particularly evident in the recent decline and the bearish forecast for the next week. The RSI consistently below 50, with values nearing oversold territory, 36.8 on March 30th, suggests potential short-term bounces, but the overall momentum remains negative. Considering the support at $264 and the forecast price nearing $285, a conservative strategy focusing on short-term rebounds with tight stop losses is advisable. I recommend a short-term long position entry at $298 on April 1, 2025, with a stop loss set at $292 to mitigate potential losses if the downtrend continues. The target price for this trade should be $307, aiming to capitalize on a brief upward correction within the prevailing bearish market. To further refine this strategy, we'll incorporate the Bollinger Bands. The bottom band consistently provides a potential support level. Given the RSI nearing oversold and the forecast price around $298, a second long entry at $290 on April 5, 2025, with a stop loss at $285, could be considered. The target price for this entry is $298. Combining these two strategies, the most efficient portfolio would involve entering long positions at $298 and $290, setting stop losses at $292 and $285 respectively, and targeting $307 and $298 for both positions. This approach balances potential gains with risk mitigation in the current market conditions. Based on the historical data and forecast, STRK shows a declining trend, particularly evident in the recent forecast period. The RSI consistently hovers below 50, indicating a generally oversold condition. The Bollinger Bands are contracting, suggesting decreasing volatility. Considering these factors, I propose a short selling strategy. Entry price will be $0.61, placing the stop loss at $0.62 to protect against a potential reversal. The initial target price is $0.53, aligning with the lower end of the forecast range and the lower Bollinger Band. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, consider entering a long position at $0.53, with a stop loss at $0.52 and a target price of $0.61. Conversely, if the price touches the upper Bollinger Band and the RSI exceeds 80, initiate a short position at $0.717, setting a stop loss at $0.72 and a target price of $0.61. The most efficient portfolio will involve a combination of these strategies, dynamically adjusting positions based on real-time RSI and Bollinger Band readings. This approach aims to capitalize on both short-term and long-term price movements, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a downtrend. The price has been consistently declining from March 30, 2025, and the forecast for the next week predicts further downward movement, potentially reaching $1,620. The RSI consistently below 50, currently at 34.0, indicates that the asset is in an oversold condition, but the downtrend is still strong. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce, but the overall trend remains bearish. Therefore, I recommend a short selling strategy. We will enter a short position at $1,800. The stop loss will be set at $1,790, just above the lower Bollinger Band, to protect against a potential bounce. The initial target price will be $1,660, aligning with the forecast price for April 6, 2025. To optimize returns, I propose a layered approach. If the price reaches $1,660, we will secure partial profits and move the stop loss to the entry price of $1,800. This secures initial gains while mitigating further losses if the trend reverses. If the price continues to decline, we will target $1,620. Given the strong downtrend and oversold conditions, this strategy offers a high probability of success with clearly defined risk management parameters. The support price of $1,550 acts as a further downside target if the downtrend persists beyond the initial forecast. Based on the historical data and forecast, XRP exhibits a downtrend, particularly evident in the recent forecast prices, consistently declining from $2.17 to $2.01. The RSI readings have also been trending downwards, indicating weakening momentum, with values consistently below 60 and nearing oversold territory. Considering the Bollinger Bands, the price has been approaching the lower band, suggesting potential further downside. Therefore, I recommend a short selling strategy. We will enter a short position at $2.17, placing a stop-loss order at $2.21 to protect against a sudden upward reversal. Our initial target price will be $2.06, aligning with the established support level. To maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $2.06, we will move our stop-loss to the entry price of $2.17, effectively locking in profits and mitigating risk. Subsequently, we will adjust the target price to $2.01, based on the latest forecast, aiming to capitalize on the anticipated further decline. This combined RSI, Bollinger Bands, and support/resistance analysis provides a robust framework for a high-return short selling strategy for XRP. Based on the historical data and forecast, Binance Coin shows a slightly downward trend, with the forecast prices consistently below the recent closing prices. The support price remains stable at $579, while the resistance fluctuates around $636. Considering the RSI values, which have generally been below 80 and often below 55, the asset isn't currently overbought. However, the recent dips below 46 suggest potential oversold conditions. Combining this with the Bollinger Bands, where the price has occasionally touched the lower band, we can formulate a strategy. We will implement a combination of RSI and Bollinger Band strategy. The strategy involves identifying potential buy-in opportunities when the RSI falls below 20 and the price touches the lower Bollinger Band. For example, on March 30, 2025, the closing price was $601, the RSI was 46.1, and the lower Bollinger Band was $564. We will wait for the price to drop to $598 on April 6, 2025, which is the forecast price. We will enter a long position at $598, with a stop-loss set at $579, the support price. Our initial target price will be $636, the resistance price, aiming for a profit of $38. If the price reaches $636, we can move our stop-loss to break even to protect profits. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Stellar shows a declining trend. The price has been fluctuating within a range bounded by a support of $0.262 and a resistance of $0.294. The RSI values are consistently below 80, indicating that the asset is not currently overbought, but also not significantly oversold. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential downside risk. Considering these factors, I recommend a short selling strategy. Entry price should be $0.285, with a stop loss set at $0.294 to protect against a potential upward breakout. The target price for this short position should be $0.253, aligning with the forecast data and the lower Bollinger Band. To refine the strategy, I will incorporate the RSI indicator. If the RSI falls below 20, signaling an oversold condition, we will cover the short position and potentially look for a long entry. However, based on the current forecast, the price is expected to continue its downward trend. Therefore, the core strategy remains short selling with an entry at $0.285, a stop loss at $0.294, and a target price of $0.253. This approach balances risk management with the expectation of continued price decline, maximizing potential returns while minimizing potential losses. Based on the historical data and forecast, Doge-Coin shows an overall upward trend, supported by the consistently rising forecast prices. The RSI consistently stays within the 54.8 to 66.7 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been expanding, suggesting increasing volatility. Given the support price of $3.86 and the forecast prices consistently above this level, I recommend a long position. The entry price will be $3.85 on April 1, 2025. A stop loss should be placed just below the support level at $3.84 to protect against a potential downturn. The initial target price will be $4.05, based on the forecast for April 5, 2025. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we could consider a buy-in at that level, but with a tighter stop loss near the support. If the price touches the lower Bollinger Band, it could also signal a potential buying opportunity. If the price reaches the upper Bollinger Band, a take-profit order at $4.06 on April 6, 2025, would be prudent. This combined approach, prioritizing the upward trend and incorporating RSI and Bollinger Bands for finer entry and exit points, should deliver high returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a downtrend. The RSI consistently stays below 80, indicating the asset is not significantly overbought. However, the RSI has been fluctuating between 41.1 and 49.6, suggesting periods of oversold conditions. The Bollinger Bands indicate increasing volatility with the price often touching the lower band. The forecast data further reinforces the downtrend, with prices expected to decrease to $0.636. Considering these factors, I recommend a short position strategy. We will enter a short position when the RSI drops below 40, specifically at $0.661. The stop loss will be set slightly above the upper Bollinger Band at $0.762 to account for potential price fluctuations. The target price will be $0.636, aligning with the forecast data. This strategy combines technical indicators and future price predictions for a high-probability trade. The risk-reward ratio is favorable, and the strategy is designed to capitalize on the anticipated downtrend of Cardano. Based on the historical data and forecast, Litecoin shows a clear downtrend. The recent price action has consistently broken down from previous levels, and the forecast for the next 2 weeks projects further declines. The RSI consistently remains below 50, indicating a bearish momentum. Considering the support price of $85.5, we will implement a short selling strategy. The entry price will be $83.2, coinciding with the first forecast price. The stop loss will be set at $86, just above the recent support level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $76.3, aligning with the final forecast price. To refine this strategy, we will incorporate the Bollinger Bands. The price is trading below the lower band, confirming the downtrend. We will maintain the short position until the price reaches $76.3. If the price shows signs of stabilization and the RSI approaches the oversold level of 20, we will consider closing the position and potentially re-evaluating for a long entry. The overall portfolio will be heavily weighted towards the short position, aiming to capitalize on the anticipated downward trajectory of Litecoin. This approach balances risk management with the potential for substantial returns in a declining market. Based on the historical data and forecast, Swaycoin shows a downtrend. The RSI consistently fluctuates around 45, indicating neither strong overbought nor oversold conditions. However, the forecast for the next week predicts a continued decline, with prices dropping from $2.28 to $2.07. The support price remains steady at $2.16, while the resistance is at $3.06. Considering the Bollinger Bands, the price has been approaching the lower band, suggesting potential for a further decline. Therefore, I recommend a short position strategy. The entry price for this short position should be $2.28. Place a stop-loss order at $2.46, just above the recent resistance level and the top of the Bollinger Bands. The initial target price should be $2.16, aligning with the support level. If the price reaches $2.16, consider moving the stop-loss to break even to protect profits. A secondary target price can be set at $2.07, based on the forecast data. This strategy combines technical indicators and price action to capitalize on the anticipated downtrend while managing risk effectively. Based on the historical data and forecast, Aptos shows a declining trend. The price has been fluctuating within the support price of $5.23 and the resistance price of $5.61. The RSI indicates that the asset is currently not oversold, with values generally above 40. The Bollinger Bands show a narrowing trend, suggesting decreasing volatility. The forecast for the next week predicts a further decline, reaching as low as $4.81. Therefore, I recommend a short position strategy to capitalize on this downward trend. The entry price for this short position should be $5.35. Given the support level at $5.23, the stop-loss should be set at $5.5 to limit potential losses if the price unexpectedly reverses. The initial target price should be $5.04, aligning with the forecast for April 4, 2025. If the price reaches $5.04, we can reassess the situation and potentially set a new target price closer to the forecast low of $4.81, adjusting the stop-loss accordingly to protect profits. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk. Based on the historical data and forecast, SE has shown a significant downtrend, particularly evident in the recent forecast prices, which are consistently declining. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands also suggest a contracting range, indicating increasing volatility and potential for a significant price movement. Given the current downtrend and oversold conditions, I recommend a short selling strategy. We will enter a short position at $0.181. The stop-loss will be set at $0.185 to protect against a potential short-term reversal. The initial target price is $0.155, aligning with the forecast price on April 6, 2025. To refine this strategy, we'll incorporate the support and resistance levels. The support level at $0.113 provides a secondary target if the price continues to decline. If the price approaches the resistance level of $0.21, we will consider covering the short position to secure profits. The RSI readings suggest that the asset is oversold, and a bounce is possible, but the overall trend remains bearish. Therefore, a conservative approach with a tight stop-loss and clearly defined target prices is crucial to maximizing returns while minimizing risk. This strategy aims to capitalize on the anticipated downtrend while safeguarding against unexpected price fluctuations. Based on the historical data and forecast, Ethereum Classic shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently hovers below 50, with values dipping into the oversold territory, below 36.3, towards the end of the historical period. The Bollinger Bands are narrowing, indicating decreasing volatility and a potential for a significant price movement when the bands widen again. Considering these factors, I recommend a short selling strategy. Entry price should be $16.6, placing a stop-loss order at $17.1 to protect against a sudden reversal. The initial target price is $15.6, aligning with the forecast price on April 6, 2025. To refine this strategy, we'll incorporate a dynamic approach. If the price breaks below $15.6, we can adjust the target price to $15.8, capitalizing on the continued downward momentum. Conversely, if the RSI rises above 50 and the price approaches the upper Bollinger Band, we should close the position to avoid potential losses. This combined RSI and Bollinger Band strategy, coupled with a disciplined stop-loss and dynamic target price adjustments, aims to maximize returns while minimizing risk in this bearish market. Based on the historical data and forecast, Polygon shows a clear downtrend. The price has been consistently declining from March 17, 2025, to March 30, 2025, and the forecast for the next week projects further decline. The RSI consistently stays below 50, indicating a bearish momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the price is approaching the lower band, further confirming the downtrend. Considering the support price of $0.202, I recommend a short selling strategy. We will enter a short position at $0.204. The stop loss will be set at $0.215 to protect against potential short-term rebounds. Our target price will be $0.18, aligning with the forecast and the lower Bollinger Band. To optimize our returns, we will use a combination of RSI and Bollinger Band strategies. When the RSI falls below 30, indicating an oversold condition, we will initiate a short position at $0.204. If the price breaks above the upper Bollinger Band, we will immediately close the position and take profit. If the RSI rises above 50, we will consider exiting the short position to minimize losses. The stop loss will be set at $0.215, and the target price will be $0.18. This portfolio combines the strengths of both indicators, allowing us to capitalize on the prevailing downtrend while mitigating risks through dynamic adjustments based on real-time market conditions. Based on the historical data and forecast, AEVO shows a declining trend. The price has been fluctuating within a range, testing the resistance at $0.113 and finding support at $0.108. The forecast for the next week indicates a continued downward trajectory, with prices potentially reaching $0.098. Considering the RSI values, which have been consistently below 80 and recently dipping into the oversold territory around 35, we can expect a potential rebound. However, the Bollinger Bands suggest that the price is likely to remain below the moving average, reinforcing the bearish sentiment. Therefore, I propose a short-term contrarian strategy capitalizing on potential short-term rebounds while acknowledging the overall downtrend. We will enter a short position at $0.109. The stop loss will be set at $0.114 to protect against a sudden upward spike. The initial target price will be $0.103, aligning with the forecast and the lower Bollinger Band. If the price reaches $0.103 without triggering the stop loss, we will consider moving the stop loss to the entry price of $0.109 to secure profits and potentially ride the momentum further. This approach combines RSI signals with Bollinger Band analysis and the forecast to manage risk and maximize potential returns in this volatile market. Based on the historical data and forecast, optimism exhibits a downtrend, particularly evident in the recent forecast period. The price has been consistently declining, and the forecast predicts further drops. The RSI consistently remains below 50, indicating a bearish momentum, with readings dipping as low as 34.7, suggesting potential oversold conditions. The Bollinger Bands also show a narrowing trend, which often precedes significant price movements. Considering these factors, I recommend a short selling strategy. Enter a short position at $0.773, placing a stop-loss order at $0.79, just above the upper Bollinger Band to avoid false breakouts. The initial target price should be $0.641, aligning with the forecast for April 6, 2025. To optimize returns and manage risk, I suggest a dynamic adjustment of the target price. If the price reaches $0.641 and the RSI falls below 20, indicating a strong oversold condition, consider moving the stop loss to the entry price of $0.773 to lock in profits and potentially allowing for a reversal trade. If the price continues to decline below $0.641 and the RSI approaches the oversold level, consider lowering the target price to $0.671, which is closer to the support level of $0.672. This combined strategy leverages the bearish trend, utilizes technical indicators for precise entry and exit points, and incorporates risk management techniques to maximize potential gains while minimizing losses. Based on the historical data and forecast, STRK demonstrates a downtrend. The RSI consistently fluctuates below 80, indicating a lack of overbought conditions, but recently dipped below 37, suggesting oversold territory. The Bollinger Bands show a contraction, which often precedes a significant price movement. The forecast data for the next week projects a continued decline, with prices potentially reaching $0.132. Considering these factors, I propose a contrarian strategy focusing on short-term bounces within the downtrend. My recommended strategy is to enter a long position at $0.147, coinciding with the support level and a potential oversold bounce. The stop loss should be placed slightly below the support at $0.145 to mitigate risk. The initial target price is set at $0.158, aiming for a rebound towards the recent high. If the price action suggests stronger momentum, a secondary target could be $0.169. This strategy combines RSI oversold signals, Bollinger Band dynamics, and support level confluence to maximize potential returns while managing risk. Based on the historical data and forecast, Solana shows a downtrend with decreasing forecast prices. The RSI consistently stays within the 39 to 52 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential for a breakout. Given the support price of $124 and the forecast predicting further declines, I recommend a short position. Entry price will be $124, with a stop loss placed just above the recent high of $143, at $143. The initial target price will be the support level of $120. To refine this strategy, I will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will cover the short position at $124. Conversely, if the price touches the bottom of the Bollinger Bands, indicating a potential rebound, we will close the short position at $124. If the price breaks above the top of the Bollinger Bands, signaling a potential uptrend, we will exit the short position at $124 and consider a long position. This dynamic approach will allow us to capitalize on short-term fluctuations while maintaining a cautious stance given the overall bearish forecast. Based on the historical data and forecast, Jupiter shows a downtrend. The RSI consistently hovers below 50, indicating a bearish sentiment, with values frequently dipping into oversold territory below 30. The forecast prices for the next week continue this downward trajectory, predicting a further decline. The support price remains steady at $0.473, while the resistance fluctuates but generally stays below $0.5. Considering these factors, I recommend a short selling strategy. My strategy will be a combination of RSI and Bollinger Bands. We will enter a short position at $0.477 when the forecast price is released on Monday, March 31, 2025. The stop loss will be set at $0.484, slightly above the recent high and the bottom of the Bollinger Bands to protect against unexpected upward movements. The target price will be $0.425, aligning with the lowest forecast price for the week. This strategy aims to capitalize on the predicted downtrend, utilizing the RSI to confirm the bearish momentum and the Bollinger Bands to manage risk and define profit-taking levels. Based on the historical data and forecast, Render exhibits a fluctuating trend with recent upward momentum. The price has tested the resistance level of $4.14 and has been bouncing around. The RSI values indicate that the asset is currently in a neutral zone, fluctuating between 42 and 60. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper band, suggesting potential overbought conditions. Considering these factors, I propose a strategy that combines trend following and mean reversion techniques. We will initiate a long position when the RSI dips below 40, indicating an oversold condition. Specifically, we will enter a long position at $3.28, placing a stop-loss order at $2.97, just below the established support level. Our initial target price will be $3.82, aligning with the upper Bollinger Band. To refine this strategy, we will implement a dynamic target price adjustment based on the RSI. If the price reaches $3.82 and the RSI is below 70, we will extend the target price to $4.05. If the RSI exceeds 70, we will consider taking partial profits at $3.82 and setting a trailing stop-loss order at $3.75 to protect gains. For the forecast period, if the price moves below $3.35, we will close the position and re-evaluate the trend. This combined strategy aims to capitalize on short-term price fluctuations while managing risk effectively through stop-loss orders and dynamic target price adjustments. This approach balances potential high returns with prudent risk management, aligning with a Wall Street investment expert's philosophy. Based on the historical data and forecast, Solana name service is exhibiting a strong downward trend. The recent price action shows consistent declines, and the forecast for the next week projects further decreases. The RSI consistently remains below 50, indicating a bearish momentum, and has recently dipped below 35, signaling a potential oversold condition. Considering the Bollinger Bands, the price has been consistently trading near the lower band, reinforcing the downtrend. Therefore, I recommend a short selling strategy. Our entry price will be $0.0861, coinciding with the forecast for April 6, 2025. To manage risk, we will set a stop loss at $0.0966, just above the recent high from March 30, 2025. The initial target price will be $0.08, aiming to capture a significant portion of the anticipated decline. We will then adjust the target price based on subsequent price movements and technical indicators. This strategy combines the bearish trend identified through historical data and forecasts with RSI and Bollinger Band signals for precise entry and exit points. Based on the historical data and forecast, Doge-Coin exhibits a weakening trend. The price has been fluctuating within a range, but the forecast indicates a continued downward trajectory, potentially reaching $0.15. The RSI consistently remains below 60, suggesting a lack of strong bullish momentum. The Bollinger Bands are narrowing, indicating decreasing volatility. Given this analysis, I recommend a short selling strategy. The entry price should be $0.167. A stop-loss order should be placed at $0.17, just above the recent resistance level. The initial target price should be $0.15, aligning with the forecast. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 30, which hasn't occurred recently, it would signal an oversold condition, suggesting a potential bounce. However, given the overall bearish outlook, we'll prioritize the short selling position. If the price touches the bottom of the Bollinger Bands, which is currently around $0.157, it could indicate a potential short-term reversal. In that case, consider adjusting the target price to $0.154. This combined strategy balances the bearish trend with potential short-term fluctuations, maximizing profit potential while managing risk. Based on the historical data and forecast, PEPE shows a slightly decreasing trend with support at $0.00000660 and resistance at $0.00000740. The RSI fluctuates between 43.3 and 57.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price volatility, with the current price nearing the middle band. Considering the forecast for the next week predicts a continuous decrease, a conservative strategy focusing on short-term gains and risk mitigation is recommended. We will implement a combined strategy using RSI and Bollinger Bands, prioritizing a cautious approach given the bearish forecast. The strategy involves a short position entry at $0.00000730. The stop loss will be set at $0.0000780, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.0000680, aligning with the forecast and providing a reasonable profit margin. If the price reaches $0.0000680, we will reassess the situation. If the RSI falls below 40, indicating an oversold condition, we will consider covering the short position and potentially initiating a long position at $0.0000680 with a stop loss at $0.0000650 and a target price of $0.0000710. This combined approach leverages both technical indicators and the forecast to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SHIB Inu has been fluctuating within a narrow range, with support around $0.0000120 and resistance around $0.0000150. The RSI has been oscillating between 41.6 and 57.1, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been relatively tight, suggesting low volatility. The forecast for the next week predicts a downward trend, with prices decreasing from $0.0000127 to $0.0000118. Considering the RSI is currently below 80 and the forecast suggests a downward trend, I recommend a short selling strategy. My strategy is to short SHIB Inu at $0.0000127. The stop loss will be set at $0.0000136, just above the recent resistance level, to protect against unexpected upward movements. The initial target price is $0.0000121, aligning with the forecast price on April 5, 2025. If the price continues to decline, I will adjust the target price to $0.0000118, the final forecast price on April 6, 2025. This strategy combines the downward forecast with RSI and Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dog with Hat demonstrates a downtrend. The price has been consistently declining from March 17, 2025, to March 30, 2025, and the forecast for the next week projects further price drops, reaching a low of $0.386. The RSI consistently remains below 50, indicating a bearish momentum. Considering the support price of $0.433, I recommend a short position. We will enter a short position at $0.46. The stop loss will be set at $0.466, just above the resistance level, to protect against a potential bounce. The initial target price will be $0.433, aligning with the support level. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests an oversold condition, which might present a short-term buying opportunity. However, given the overall downtrend and the forecast, we will maintain the short position. If the price reaches $0.433, we will take partial profits and adjust the stop loss to the entry price of $0.46. If the price continues to decline, we will lower the stop loss further, securing profits along the way. The final target price, based on the forecast, is $0.386. This layered approach allows us to capitalize on the downtrend while mitigating risk through strategic stop-loss adjustments. Based on the historical data and forecast, Doge-Coin shows a downtrend. The price has been fluctuating within a range bounded by support at $0.00204 and resistance at $0.0024. The RSI indicates that the asset is currently in a neutral zone, but recently dipped below 45, suggesting a potential for further decline. The Bollinger Bands are narrowing, which often precedes a significant price movement. The forecast for the next week predicts a continued downward trend, with prices falling to $0.00211. Therefore, I recommend a short position strategy. My proposed strategy is to enter a short position at $0.00229. Given the downward trend and the forecast, I will set a stop loss at $0.0024, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The target price for this trade will be $0.00211, aligning with the forecast price for the week. This strategy combines technical analysis using RSI and Bollinger Bands with consideration of support and resistance levels and future price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, NEAR protocol shows a declining trend with a recent bounce. The support price remains consistent at $2.52, while the resistance fluctuates around $2.92. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently approaching the lower band, suggesting a potential short-term pullback. Given the forecast data predicting further declines, a cautious approach is warranted. I recommend a short position strategy. The entry price should be $2.6, with a stop-loss set at $2.7 to protect against unexpected upward movements. The initial target price should be $2.5, aiming to capitalize on the anticipated downward trend. To refine this strategy, I'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, consider entering a long position at $2.31, setting a stop-loss at $2.21 and a target price at $2.5. Conversely, if the RSI reaches 80 or above, indicating an overbought condition, consider entering a short position at $2.92, with a stop-loss at $2.92 and a target price at $2.5. Combining these signals with Bollinger Bands, I suggest a portfolio with 60% short position and 40% long position. The most efficient strategy would be to short NEAR protocol at $2.6, with a stop-loss at $2.7 and a target price at $2.5, and to long NEAR protocol at $2.31, with a stop-loss at $2.21 and a target price at $2.5. Based on the historical data and forecast, Internet Computer exhibits a downtrend, particularly evident in the recent forecast prices consistently below $5.39. The RSI consistently below 50, with values dipping as low as 37.3, indicates a bearish sentiment and potential oversold conditions. The Bollinger Bands are contracting, suggesting increasing volatility and a potential breakout. Given this, I recommend a short position strategy. We will initiate a short position at $5.39, placing a stop-loss order at $5.5 to limit potential losses if the price reverses. The initial target price is set at $4.73, aligning with the forecast price for April 6, 2025. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI rises above 60, indicating overbought conditions, we'll tighten our stop-loss to $5.4. Conversely, if the price touches the lower Bollinger Band, currently around $4.73, we'll consider taking partial profits at $4.96 and adjusting the stop-loss to break even. This dynamic approach allows us to capitalize on the predicted downtrend while mitigating risk through adaptive stop-loss adjustments based on technical indicators. The overall portfolio will be 70% short position, 20% RSI strategy, and 10% Bollinger Band strategy. Based on the historical data and forecast, Injective is currently in a downtrend. The price has been consistently falling, with the forecast indicating further declines. The support price of $8.66 acts as a crucial level, and the RSI values have been consistently below 50, suggesting a bearish sentiment. The Bollinger Bands are also widening, indicating increased volatility and a potential continuation of the downtrend. Therefore, I recommend a short selling strategy. Entry price will be $8.72, with a stop-loss placed at $9.12, just above the upper Bollinger Band, to protect against a potential reversal. The initial target price is $7.59, aligning with the forecast for April 3, 2025. To maximize returns, I propose a tiered target approach. If the price reaches $7.59, take 50% of the position off the table. If the price continues to fall, the second target price is $7.23, where another 30% of the position will be closed. Finally, if the price reaches $6.83, close the remaining 20% of the position. This strategy combines the RSI, Bollinger Bands, and forecast data to identify a high-probability short-selling opportunity, managing risk with a tight stop-loss and maximizing potential profit with a tiered target approach. Based on the historical data and forecast, BTC is showing a clear downtrend. The recent price action has consistently moved downward, supported by the forecast predicting further declines. The RSI values hover around 37 to 47, indicating neither strong overbought nor oversold conditions, but the recent downtrend suggests a potential for further bearish momentum. The Bollinger Bands are contracting, which often precedes a significant price movement. Given the forecast, I recommend a short selling strategy. We will enter a short position at $224. The stop loss will be set at $228 to protect against a potential upward reversal. The initial target price is $200, aiming to capitalize on the predicted downward trend. To refine the strategy, we will incorporate a dynamic adjustment based on the RSI. If the price rebounds and the RSI reaches 60, we will close the position and secure a profit. Conversely, if the price falls and the RSI drops below 30, we will adjust the target price to $191 to maximize potential gains. This combined approach, leveraging both the forecast and RSI signals, offers a balanced and adaptable investment strategy for BTC. The portfolio will consist of 100% short positions. Based on the historical data and forecast, THETA network shows a clear downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week predicts further drops. The RSI consistently below 50 indicates a bearish momentum, with values nearing oversold territory, suggesting potential for a short-term bounce but not a trend reversal. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is trading near the lower band, reinforcing the downtrend. Therefore, I recommend a short selling strategy. Our entry price will be $0.815, coinciding with the recent low and the lower Bollinger Band. To manage risk, we will set a stop loss at $0.83, slightly above the recent high and the upper Bollinger Band. The initial target price will be $0.727, aligning with the forecast for April 4, 2025. If the price reaches this target, we can reassess the situation and potentially set a secondary target at $0.661, corresponding to the forecast for April 6, 2025. This strategy leverages the confirmed downtrend and the bearish signals from the RSI and Bollinger Bands to maximize potential returns while implementing robust risk management. Based on the historical data and forecast, WorldCoin exhibits a downtrend, particularly evident in the recent forecast period. The RSI consistently hovers below 50, indicating a generally oversold condition. The Bollinger Bands show the price approaching the lower band, further reinforcing the bearish sentiment. Therefore, a short selling strategy is recommended. We will enter a short position at $0.79 with a stop loss placed just above the upper Bollinger Band at $0.952. The initial target price will be $0.691, aligning with the forecast price for April 5, 2025. To manage risk and maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $0.691, we will move the stop loss to the entry price of $0.79, securing profits and reducing risk. If the price continues to decline, we will adjust the target price to $0.665, the final forecast price for April 6, 2025. This approach allows us to capitalize on the predicted downtrend while protecting our capital through strategic stop-loss adjustments. The portfolio will be 60% short selling WorldCoin, 20% cash, and 20% allocated to other assets. Based on the historical data and forecast, Hooked Protocol demonstrates a downtrend, particularly evident in the recent forecast period with prices decreasing from 0.131 to 0.112. The RSI consistently hovers around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show a contraction, suggesting decreasing volatility. Considering these factors, a short selling strategy is recommended. The entry price should be set at $0.131, coinciding with the start of the forecast period. A stop loss should be placed at $0.126, just above the forecast high, to protect against unexpected upward movements. The target price is projected at $0.112, aligning with the forecast low. To refine the strategy, we can incorporate RSI signals. When the RSI dips below 30, it signals an oversold condition, potentially indicating a good entry point for a long position. Conversely, an RSI above 70 suggests an overbought condition, favoring a short position. Given the current downtrend, we will prioritize short positions. The Bollinger Bands can be used to confirm the trend. If the price breaks below the lower band, it reinforces the downtrend, supporting a short position. The portfolio will prioritize short positions with an entry price of $0.131, a stop loss of $0.126, and a target price of $0.112. This strategy combines the forecast trend, RSI signals, and Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Artificial Superintelligence Alliance has been exhibiting a downtrend, particularly evident in the recent forecast prices, which are consistently below the recent closing prices. The RSI consistently hovers around the 36 to 47 range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show that the price has been approaching the lower band, suggesting potential support around $0.462. Considering these factors, a short selling strategy is recommended. We will enter a short position when the price reaches $0.476, placing a stop-loss order at $0.49 to limit potential losses if the price reverses. The target price for this trade will be $0.416, aiming to capitalize on the anticipated downward trend. To refine this strategy, we can incorporate the RSI levels. If the RSI rises above 80, we will close the short position and take profits. Conversely, if the RSI falls below 20, we will consider covering the short position and potentially reversing to a long position. Given the forecast, the support level at $0.462 provides a further confirmation for our short position. The portfolio will be 60% short Artificial Superintelligence Alliance, 20% in cash, and 20% in other assets to diversify risk. This balanced approach aims to maximize returns while mitigating potential downsides. Based on the historical data and forecast, Polkadot shows a declining trend. The RSI indicates that the asset is currently in the oversold territory, with values fluctuating between 37.7 and 43.3. The forecast for the next week projects a continuous downward trajectory, with prices decreasing from $4.11 to $3.66. Considering these factors, I recommend a short position strategy. We will enter a short position at $4.05, placing a stop-loss order at $4.11 to protect against a potential upward reversal. Our target price for this short position is $3.74, aligning with the forecast and providing a reasonable profit margin. To enhance the strategy, we will incorporate the Bollinger Bands. The price consistently trading near the lower band suggests a bearish momentum. If the price breaks above the upper Bollinger Band, which is currently around $4.78, it would signal a potential trend reversal, and we should immediately exit the position. This combined RSI and Bollinger Bands approach offers a robust risk management framework, aiming for a high return by capitalizing on the anticipated downward trend while minimizing potential losses. Based on the historical data and forecast, Filecoin demonstrates a downtrend with decreasing prices, particularly evident in the recent forecast. The RSI consistently hovers around the middle range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show that the price has been approaching the lower band, suggesting a potential for a slight bounce before resuming the downtrend. Therefore, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $2.75, coinciding with the established support level. To mitigate risk, place a stop-loss order at $2.65, just below the lower Bollinger Band. A target price of $2.92, the previous resistance level, will provide a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. If the price reaches $2.65 and the RSI dips below 20, indicating an oversold condition, we will maintain the long position with a revised target price of $2.99. Conversely, if the price approaches $2.92 and the RSI exceeds 80, indicating an overbought condition, we will exit the position to avoid potential losses. This combined strategy leverages both support/resistance levels and RSI signals to maximize profit potential while minimizing risk. The portfolio will consist of 60% of the initial strategy and 40% of the RSI strategy. Based on the historical data and forecast, Conflux shows a declining trend. The price has been decreasing from March 30, 2025, and the forecast indicates further decline in the coming week. The support price is consistently at $0.0784, while the resistance is at $0.0925. Considering the RSI values, which have been fluctuating but generally indicating a weakening momentum, and the Bollinger Bands showing a narrowing range, suggesting potential volatility, a short selling strategy is recommended. We will initiate a short position at $0.079. A stop-loss order will be placed at $0.0866 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.0718, aligning with the forecast. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, oversold, we will consider covering our short position. Conversely, if the price touches the lower band of the Bollinger Bands, it might signal a potential rebound, prompting us to adjust the stop-loss or partially close the position. We will set a secondary target price at $0.0671, based on the forecast. This combined approach, utilizing both trend analysis and technical indicators, aims to maximize returns while managing risk effectively. The portfolio will be 60% short selling, 20% RSI strategy, and 20% Bollinger Band strategy. Based on the historical data and forecast, Ethereum name service exhibits a downtrend, particularly evident in the recent forecast prices. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping below the oversold level of 20. The Bollinger Bands also suggest a contracting range, potentially signaling a breakout. Considering these factors, I recommend a short selling strategy. Entry price should be $15.4, placing the stop-loss at $16.8 to safeguard against a sudden price reversal. The initial target price is $13.7, aligning with the forecast price on April 6, 2025. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 30 and the price touches the lower band of the Bollinger Bands, it indicates a strong selling opportunity. We will enter a short position at $15.1, with a stop-loss at $16.6. The first target price will be $14.2, and if the price continues to decline, the second target price will be $13.7. This combined strategy leverages both technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Avalanche shows a downtrend in the recent week. The RSI indicates that the asset is approaching oversold conditions, with values fluctuating around 42.5. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the forecast predicts a further decline to $17.7. Therefore, a short selling strategy is recommended. We will initiate a short position at $19.5, placing a stop-loss order at $21.4, just above the recent resistance level. The initial target price is set at $18.3, aligning with the forecast for April 3, 2025. To refine this strategy, we will implement a dynamic adjustment based on the RSI and Bollinger Bands. If the RSI moves below 20, indicating a strong oversold condition, we will adjust the target price to $17.7, corresponding to the forecast for April 6, 2025. Conversely, if the price touches the support level of $18.2, we will move the stop-loss to $18.5 to protect against a potential rebound. This combined approach leverages both the historical trend and future forecasts to maximize potential returns while minimizing risk. Based on the historical data and forecast, Doge-Coin shows a declining trend. The price has been fluctuating within a range bounded by a support price of $0.0227 and a resistance price of $0.0235. The RSI consistently hovers around the mid-40s, indicating a neutral momentum, with a dip below 40 in the last few days. The Bollinger Bands show a narrowing range, suggesting decreasing volatility, and the forecast predicts a continued downward trajectory, potentially reaching as low as $0.0199. Therefore, I recommend a short position strategy capitalizing on the predicted decline. The entry price for the short position should be $0.0228. Given the support level at $0.0227, the stop loss should be set slightly above this level at $0.023 to avoid being prematurely stopped out by short-term fluctuations. The initial target price should be $0.021, aligning with the forecast. If the price reaches this target, we can reassess the situation and consider a trailing stop loss or further reduction target based on subsequent price action. This strategy combines the downward trend, RSI readings, and Bollinger Bands analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PENDLE shows a slight upward trend, although it has been fluctuating recently. The RSI consistently stays above 40, indicating it's not deeply oversold, and the forecast suggests a gradual decline in the coming week. Considering these factors, I propose a moderately bullish strategy with a focus on short-term gains. We will look for opportunities when the price dips towards the support level of $2.5. When the RSI falls below 40, we will enter a long position at $2.44. The stop loss will be set just below the support level at $2.32 to protect against unexpected drops. Our target price will be $2.55, aiming to capitalize on the anticipated bounce from the support and the slight upward trend. To further refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, around $2.32, and the RSI is near the oversold level, it signals a potential buying opportunity. We will enter a long position at $2.44, placing a stop loss at $2.32. The target price will be $2.55, aligning with the forecast. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. This portfolio will be the most efficient strategy. Based on the historical data and forecast, the sandbox demonstrates a declining trend, especially with the forecasted prices consistently below the recent closing prices. The RSI values have fluctuated, but recently decreased, ending at 39.2, indicating a potential oversold condition. Considering the support price of $0.269 and the decreasing Bollinger Bands, the strategy will focus on short selling opportunities. The entry price for this short position will be $0.271. The stop loss will be set at $0.279, just above the recent high and above the support level, to protect against a potential upward reversal. The initial target price will be $0.251, aligning with the forecast price and the lower Bollinger Band. If the price reaches $0.251, we will reevaluate the situation and consider adjusting the target price based on the prevailing market conditions and further technical analysis. This strategy combines the oversold RSI signal, the downward trend, and the Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Decentraland shows a downtrend. The price has been consistently falling in the last 2 weeks, and the forecast for the next week predicts further decline. The RSI consistently indicates oversold conditions, particularly towards the end of the observation period, hovering around 37.0 to 38.3. While the price has bounced off the support level of $0.245 several times, the overall momentum suggests a bearish market. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the predicted decline. My proposed strategy involves entering a short position at $0.247. Given the oversold RSI and the downward trend, a stop loss should be set slightly above the recent high, at $0.268 to protect against unexpected upward movements. The initial target price will be $0.223, aligning with the forecast for the first few days of the next week. If the price continues to decline beyond $0.223, the target price can be adjusted downwards to $0.22. This strategy combines the bearish trend, oversold RSI, and forecast data to maximize potential returns while managing risk through appropriate stop-loss placement. Based on the historical data and forecast, ENG coin shows a downtrend. The price has been fluctuating within a range, but the forecast indicates further decline. The RSI is consistently below 50, suggesting a bearish momentum. The Bollinger Bands are also contracting, which can indicate a period of consolidation before a potential breakout. Considering these factors, a short selling strategy is recommended. We will enter a short position at $0.0834. The stop loss will be set just above the upper Bollinger Band at $0.0999 to protect against unexpected upward movements. The initial target price will be $0.0719, based on the forecast for April 6, 2025. To optimize the portfolio, we will implement a tiered approach. The first target price of $0.0719 will trigger a partial profit booking, securing some gains. Subsequently, we will move the stop loss to the entry price of $0.0834, locking in a risk-free profit. If the price continues to decline, we will set a second target price at $0.07. This strategy combines the benefits of RSI, Bollinger Bands, and price forecasts to maximize potential returns while managing risk effectively. The overall strategy aims to capitalize on the expected downtrend of ENG coin. Based on the historical data and forecast, Uniswap shows a downtrend, particularly evident in the recent forecast prices consistently declining from $5.95 to $5.17. The RSI consistently hovers below 50, indicating a bearish sentiment, with values frequently dipping below 35, suggesting oversold conditions. The Bollinger Bands are narrowing, which often precedes significant price movements. Considering these factors, I recommend a short selling strategy. We will enter a short position at $5.95, placing a stop-loss order at $6.1 to protect against a potential upward reversal. The initial target price will be $5.45, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating a strong oversold condition, we can consider covering a portion of our short position at $5.36. Conversely, if the price touches the lower Bollinger Band, signaling a potential bounce, we will adjust our stop loss to $5.36. The ultimate target price remains $5.17, aligning with the final forecast price. This tiered approach allows for flexibility and risk management, maximizing potential profits while minimizing losses in this volatile market. Based on the historical data and forecast, Chainlink has been experiencing a downtrend. The price has consistently been below the center of the Bollinger Bands, indicating a potential bearish momentum. The RSI values have been fluctuating but generally below 60, suggesting that the asset is not strongly overbought. Considering the forecast for the next week, the price is projected to continue declining, with a low of $12.2. Therefore, I recommend a short selling strategy. The entry price will be $13.6, coinciding with the start of the forecast period. A stop loss will be set at $15.7, just above the upper Bollinger Band to protect against unexpected upward spikes. The initial target price will be $12.2, aligning with the lowest forecast price. To refine this strategy, we'll incorporate the RSI. If the RSI drops below 20, indicating an oversold condition, we will close the position and take profits. Conversely, if the RSI reaches 80, indicating an overbought condition, we will reevaluate the position. The portfolio will prioritize the short selling strategy due to the overall downtrend and bearish forecast. If the price reaches $12.2, we will take profits and reevaluate the market conditions before considering another position. This approach balances risk and reward, capitalizing on the anticipated decline while incorporating technical indicators for added precision. Based on the historical data and forecast, Aave shows a declining trend, especially with the projected prices falling from $167 to $152 over the next week. The RSI consistently remains below 50, fluctuating between 38.3 and 48.7, indicating a generally weak momentum. Furthermore, the Bollinger Bands have been narrowing, suggesting decreasing volatility, and the price is trending downwards, nearing the lower band. Considering these factors, I recommend a short position with a conservative approach. Enter a short position at $165, placing a stop loss at $169 to protect against potential upward spikes. The initial target price should be $155, aiming to capture a significant portion of the predicted decline. To refine this strategy, we'll incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price touches the lower Bollinger Band and the RSI falls below 30, consider covering the short position and waiting for a potential rebound. If the price reaches the $155 target, trail the stop loss down to $163 to secure profits and potentially capture further downward movement. This combined strategy leverages the overall downtrend while incorporating risk management and adaptive adjustments to maximize returns and minimize losses. Based on the historical data and forecast, EOS demonstrates a volatile trend with periods of consolidation and upward movement. The RSI fluctuates around 50, indicating neither strong overbought nor oversold conditions consistently. However, the recent dip to 0.546, coupled with the forecast suggesting prices around 0.565 to 0.581, presents a potential buying opportunity. The Bollinger Bands show that the price has been oscillating within a defined range, with the recent price nearing the lower band, which could signal a potential bounce. Therefore, I recommend a long position strategy focusing on capitalizing on short-term upward momentum. The entry price for this long position will be $0.565. We will set a stop loss at $0.546, just below the support level, to mitigate potential losses if the price continues to decline. The initial target price will be $0.583, aligning with the recent resistance level. If the price reaches $0.583, we will move the stop loss to the entry price of $0.565 to secure profits and reduce risk. The final target price will be $0.597, based on the recent high, aiming for maximum profit. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Tron shows a sideways trend with fluctuating RSI values between 42.5 and 53.6, indicating neither strong bullish nor bearish momentum. The price has consistently found support around $0.227, and the Bollinger Bands suggest periods of volatility. Considering the RSI hovering around the mid-range and the forecast predicting prices around $0.23, a moderately bullish strategy is warranted. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Our strategy will involve entering long positions when the RSI dips below 40, ideally near the support level of $0.227. The entry price will be $0.227. A stop loss will be set just below the lower Bollinger Band, around $0.216 to mitigate potential losses. The target price will be set at the resistance level of $0.244, aiming for a significant profit. If the price reaches $0.244, we will take profit. We will also consider exiting the position if the RSI reaches 80, indicating an overbought condition and potential for a reversal. This combined approach balances risk and reward, capitalizing on short-term upward movements while protecting against downside risk.